Last minute revision for manufacturing accounts A level. Okay. First thing, the format. Tell me the format.
So first is direct material consumed. Okay, and this the raw material will come, then there's direct labor. Then you put the direct expenses if there are any royalties or hire of special plant. Then you get prime cost. Then
Prime cost is made up of
like all the costs added.
direct material, direct labor, and direct expenses.
Yeah, then you get prime cost. Then after prime cost, you have to do the factory overheads
You add the factory overheads. What is factory overheads?
like power, factories, like salary, unproductive
Your
wages. And all.
indirect expenses happening in the factory.
Yeah,
Okay. So in prime cost, when you add the factory overheads, what will you get?
you'll get the factory manufacturing cost.
FMC. In that,
Then in that you have to add the opening work in progress, and then minus the closing work in progress.
what will you get?
You'll get the then you'll get
Production cost
the
of completed
production
goods.
cost of production.
Yeah.
Okay, then then you add the factory profit in that. That percentage will be given, and then you get the transfer value. Then the transfer value you'll add in cost of sales.
Is transferred to the income statement.
Yeah, income statement cost of sales.
Why do you add this factory profit?
Factory profit is added to, like, if you're manufacturing the goods also, to make sure that it's proper. Like,
No. Factory profits is a difference between the cost of manufacturing and the cost of buying.
uh,
Okay. When you're manufacturing, you manufacture at a certain price, but if you buy it, you may buy it at a higher price.
hmm,
So the difference between the cost of manufacturing and the cost of buying gives you factory profit.
okay.
Okay. There are a number of questions that comes related to factory profit.
Uh,
Okay. This is the transfer price of the completed goods that goes to the income statement. Okay. Related to this factory profit, you make an account which is called the pupa account. What is a pupa account?
provision of unrealized profit account.
Profit account. How do you make this?
So pupa account ke liye first you
You have
have to,
the factory profit included in the opening inventory.
yeah, opening inventory.
Yeah, you will have the factory profit included in the
Closing.
closing inventory. Okay, then there might be decrease of unrealized profit or increase of unrealized profit.
Hmm.
Okay, so you do old minus new.
Yeah, and if it's negative, then you have to minus it from gross
If
profit. If
old
it's
minus new is positive, then it is a
add,
gain.
yeah, gain
Then pupa will be,
added.
it is
Won't
a
it be
gain.
added to the this gross profit?
So it will be added and pupa will be debited.
Oh yeah, like that, huh?
Okay, if old minus new is what? Negative.
If old minus new is negative, then it will be credited. Pupa will be credited. If old minus new is positive, then pupa would be debited.
Okay, what is the format of the income statement?
Revenue minus cost of sales. Okay, in cost of sales, like opening inventory, purchases, cash,
Revenue minus cost of sales give you what?
gross profit,
Okay, this would be gross profit on.
trading.
Okay, then
Then you have to add the factory profit to the gross profit.
factory profit would be the gross profit on manufacturing. Then you will get your total gross profit.
Yeah.
Okay,
And
gross
then
profit on trading plus gross profit on manufacturing gives you what? Your total gross profit.
yeah.
Okay, can you give me the section that would be there in your closing inventory, the current asset section?
Oh, the current asset section. Okay, so
Hmm.
in that you'll have your closing inventory, cash in hand, and all of normal thing only. Balance sheet is same only,
In
miss.
manufacturing account, you have three types of material: work in progress, finished goods, and raw material.
Oh, like that. So finished good will come.
Okay, you will have stock of raw material, stock of work in progress, and stock of finished goods, all the three.
Yeah.
Okay, For
Hmm.
pupa, if your old minus new is negative, you will subtract from gross profit. If your old minus new is positive, you will add to the gross profit.
Yeah, okay.
Are you with me?
Hmm.
Now, these are the theory questions that is normally asked in your past paper that is related to manufacturing account.
Okay.
Company was facing legal issues in July 2023. Can you please read the question for me?
Yeah, the company was facing legal proceedings in July 2023. The company's lawyer had advised that the company had a 35% chance of paying a fine of 8,000. Explain your treatment of the legal proceedings in item 4. The company will not have to pay because it's less than 50%.
Less than 50% means what?
That they don't have to pay.
It is what? Virtually certain, probable, possible.
Not probable.
Okay. It is it is not probable. It is less than 50%.
Yeah.
So it is possible but not probable. Okay.
Hmm. Yeah.
Therefore, how will you show it? You have to write this for at least 2 to 4 marks. So
Hmm.
how will you show it?
I'll write the since the
I
likelihood of
have to show the accounting treatment.
uh,
So how will you show it?
I didn't understand this, how to
Where
show.
will you show it in your books of accounts? It
In
will
the income
represent
statement
like
that
a
financial
contingent
position.
liability. What
Okay.
is contingent liability?
Like that a liability that you have to pay.
Contingent liability is something that you may have to pay, you may not have to pay. So anything which is less than 15%, anything that you have to pay, the chances of it is less than 50%. You did not watch the IS 37, right?
Yeah, I've only watched 34.
You've only watched 10. So when the chances of you
Oh yeah,
paying
sorry, huh?
anything is less than 50%, so it
Huh.
is considered as not probable. And
Hmm.
anything which is not probable is represented as a contingent liability, and contingent liability is shown in your notes to financial statements
Yeah,
to
okay.
comply with IAS 37.
Hmm.
Okay. But if the chances was 98%,
Then you'll have to pay.
you chances is 98%, still not 100. Okay. So when the chances is 98%, that means above 95%, then it's virtually certain that you would have to pay. Then for that, you create a provision. What do?
Create a provision.
You've not watched IAS 37. I have to explain this to you again.
Okay.
See, a provision is a liability that you may have to pay, you may not have to pay.
Hmm.
The timing is uncertain and the amount is uncertain.
Okay.
Like you have provision for bad and doubtful debts.
Huh.
You feel that your debtors will not pay you, and that is why you create a provision.
Okay.
Only based on the feeling you create a provision. Yes?
Yeah, fine.
If it was certain, it would have become bad debts.
Hmm.
But since it is uncertain, it is a provision.
Yeah.
And provision is shown as a deduction from trade receivables.
Hmm.
Okay. Why do you show this as a deduction as trade receivables? Because you do not want to overstate your profits. You do not want to overstate your current assets.
Got it. Yeah.
So for provisions, you treat it in the income statement
Hmm.
because the chances of it is 95% or more. So this is called virtually certain. Virtually certain that you are going to face this loss.
Got
So
it.
IAS 37 tells that when you're virtually certain that this thing is going to happen, you show it in your income statement, give the effect of it in your income statement, show it as a deduction of wherever you want to.
Okay, got it.
But if it is not probable, possible but not probable, less than 50%,
Hmm.
then you just show it as a contingent liability as per IAS 37 provisions and contingencies.
Okay.
And contingent liability is only shown as notes to account. Please watch IAS 37 after this.
Hmm.
Come on, next, read the next question.
During June 2023, goods was sent to a customer on a sale return basis. The good had a selling price of 3,000 and a cost of 1,400 before factory profit. These had been treated as having been sold in the draft statement of profit or loss, although by the year end the customer had not declared an intention to buy the good. State the accounting concept being applied in treatment of goods sent on a sale or return basis.
Now, what has happened is, do you know anything about sale or return?
So in this, they are saying ki like, oh, Mr. This will prudence and all will come, na realization and all.
But do you know anything about?
Yeah, I know realization.
Okay, tell me.
Realization is when you have to record the income only when it's been received by the business.
So this is realization, or you could say it is the revenue recognition concept. Okay, what does your revenue recognition concept tells you?
Revenue recognition concept.
Or the realization concept?
Realization is recording the income only when the business has received.
Record the income only when you have earned it.
Yeah.
Okay, so when you are selling the goods to the customer on sale or return basis,
Hmm.
what does this mean?
That he's not like received the money yet.
No. What is the meaning of sale or return basis? If you
That
like the goods, keep it.
keep it. Yeah.
If you don't like it, return it.
Hmm.
If you like it, keep it. If you don't like it, return it.
Yeah.
Okay, but whatever is your decision, you let me know so that I could record it as my sales or not record it as my sales.
Yeah.
So whenever you sell the goods on sale or return basis, the goods are
Hmm.
mostly sold on credit.
Okay.
Okay. Now these goods had a selling price of 3,000 and the cost was 1,400 before the
Ah.
factory profit.
Hmm.
Okay. So PCCG, production cost of completed goods, was 1,400. The
Yeah.
factory profit was 1,600. So the selling price was how much? 3,000.
Yeah.
These had been treated as sold in your draft profit and loss. So you made a profit and loss and you treated it as sales.
Huh.
Now, during the year end, your customer had not declared the intention to buy.
Okay.
He was not sure whether he wants to buy it or not.
Hmm.
Okay, intention to buy was not declared.
Okay.
So now tell us, can the revenue from this sale be recognized or not?
No, it cannot be because it should only be recognized when it's earned.
And state the accounting concept.
The accounting concept is revenue recognition concept.
Or you can also say realization.
Realization, I know. How can I say that only?
Yeah. Say that
Hmm.
only, na, no problem. But you should write good amount of content.
Okay.
Below every theory question, below every structure question, you will have theory questions for 7 to 8 marks, maybe
Yeah.
in 10 marks.
Hmm.
Explain two reasons why a company applies a rate of factory profit.
Okay. Benchmarking costs.
No, no, you tell me what you know, then I will teach you what you have to know.
Okay. So first is to ensure that they get like a profit from manufacturing the goods. That's my one answer.
Okay, so that means if I have a manufacturing department,
Hmm.
the production cost of completed goods should have a factory profit.
Yeah.
Why?
To make so then later, yeah, because there be factory profit you need not to continue the manufacturing. Without profit, you won't continue it.
Okay, so you know that the manufacturing department, so that you ensure that your manufacturing department is a profit center.
Yeah,
And if they are not making profits,
then they won't continue because then it's a loss.
then they won't continue. It's a loss, or they can control their production costs.
Yeah, and second one is it helps keep in like control. Like if there is like
It's the
if
same
your
thing.
business, huh?
Controlling the cost is the same thing.
No, okay, then I have a second dusra point I have. My second point is that having like uh, applying a rate of factory profit could like motivate the employees
Why will profit motivate employees?
because the employees will be like they will get something out of it now.
Now understand one thing. The first and foremost rule why you apply factory profit. Factory profit is a difference between your cost of manufacturing and cost of buying from outside.
Hmm.
Okay, your cost of manufacturing is 100,000 and your cost of buying from outside, if it is 120,000, then you know that because you are manufacturing, you are earning how much?
20,000.
20,000. So you
Hmm.
know that when you are producing the goods, you should produce it below 1,20,000.
Yeah.
So it serves as a benchmark against the
Oh,
cost of purchasing goods from external suppliers. You cannot exceed beyond this,
got it.
and you at least want this much.
Hmm.
Okay, this will help you to make an informed decision whether I should produce the goods internally or buy from outside to
Yeah.
enhance my cost efficiency.
Got it.
So if it's a 4 marker, 2 marks for this and 2 mark for this.
Hmm.
And if it is a 2 marker, only this.
Okay.
Okay. So your factory profit, okay, why do you apply it?
To benchmark it to ensure that your when if you're producing it should not exceed 120,000 because that's like then it's better
It
than
is
buy
used,
from
your factory profit is used as a benchmark.
hmm,
It is used as a benchmark against the cost of purchasing goods from suppliers.
okay.
This informs the business to make decision on whether to produce internally or buy from outside, enhancing efficiency.
Hmm.
First reason why you want the factory profit. Second reason, it promotes responsibility accounting. What is this responsibility accounting?
Like
It treats the manufacturing department as a profit center.
what I said upper.
Yeah, what you said, Upper. This approach is going to help monitor and control the costs.
Hmm.
Okay, so what is happening? Why you apply a rate of factory profit? It supports responsibility accounting by treating your manufacturing department as a profit center.
Got it.
Can you please repeat it?
You should apply factory profit as it treats as it uh as it promotes responsibility accounting, as it supports responsibility accounting by treating the manufacturing department as a profit center and ensures better monitoring and control of productions.
Better monitoring and control of production costs. Please repeat.
Yeah. This approach ensures better monitoring and control of production costs.
Why business applies rate of factory profit? Full answer. 4 mark.
Okay.
Tell me.
Explain two reasons why business may apply a rate of factory profit. So the first is benchmarking cost. The business may use it as a benchmark against the cost of production goods from external suppliers. So this information helps decide business if they like should produce it or buy them from other suppliers depending on the cost. Second point is responsibility accounting, applying a factory profit suppose responsibility accounting by treating manufacturing department as a profit center. This approach ensures better monitoring and control of production costs.
Okay. Why a manufacturing business may provide for unrealized profit? What is unrealized profit?
Profit that is not like
Yeah.
realized yet.
Okay. So you have a manufacturing account.
Hmm.
From the manufacturing account, you transfer goods to the income statement at a transfer value, which includes factory profit.
Yeah.
Okay. This includes factory profit. If the entire goods are sold,
Yeah.
if the entire goods are sold, then good enough. Okay.
Hmm.
But if the goods are not sold, then you have closing inventory.
Yeah.
You have closing inventory of finished goods.
Huh.
And this closing inventory of finished goods has a proportion of factory profit included in it.
Got it.
And because you've not sold the goods, so this is unrealized factory profit.
Yeah.
Yeah.
Hmm.
Because you've not sold the goods, this is unrealized factory profit. So why a manufacturing business provides for unrealized profit?
Okay.
Why you do this treatment of pupa, provision for unrealized profit?
To ensure that profit is not overstated.
To ensure profit is not overstated because you've not realized the profit.
Yeah, to ensure
Provide
expenses is not
for
overstated.
unrealized profit to ensure accurate financial reporting.
Hmm.
Okay, they will provide for pupa to ensure accurate financial reporting because your closing inventory should be valued at cost.
Yeah. And also to ensure that expenses are not understated.
Profits are not overstated.
Expense also, na, if expense is understated, then only profit will be overstated.
The opening inventory also has pupa and closing inventory has also pupa.
Huh.
So main reason why you account for this unrealized profit is to ensure accurate financial reporting.
Okay.
Main reason why you account for factory profit is to ensure accurate financial reporting. So it
Fine.
is deducted from the transfer value of what?
Of the
Closing
inventory.
inventory.
Uh,
Okay, it is deducted from the transfer value of closing inventory. Why?
to ensure that it's valued at cost and not higher than it.
Yeah, closing inventory we always treat it as income, right?
Yeah,
And closing inventory should be valued at cost or
cost
NRV, whichever is
higher.
low,
Lower, sorry, lower.
or a realistic asset valuation.
Huh.
Pupa is removed from the valuation of closing inventory.
Hmm.
Why?
Because they wanted to be valued at lower, na, so pupa ke baad it's more higher. So for a
The
realistic,
prudence concept tells that the current assets should not be overvalued, or they should be shown at a more realistic value.
hmm,
And
and the valuation at cost,
overstated.
wala.
Profits should not be overstated.
Yeah.
Okay. Why business provides for unrealized profit?
To ensure that profit is not overstated, to have accurate financial reporting, and to ensure that the inventory is valued at cost.
Reflecting a
More realistic asset valuation.
again, why does a manufacturing business provide for unrealized profit?
To ensure accurate financial reporting to ensure that profits are not overstated and to ensure that inventory is valued at cost, reflecting a more realistic asset valuation.
Okay, lovely. What is the important? Did you see auditing stewardship?
No, I didn't see this auditing video. Is there a video?
Explain the importance of true and fair view in the auditor's report. What is true and fair view?
I don't know.
True and fair view is basically the financial statement. The owners are separate
Yeah.
in a company and the people who manage are separate.
Yeah.
Yeah. The financial statements are prepared by those who are managing, or I would say they are prepared by the directors. This financial statement that is prepared by the directors should be true in all possible aspects.
Yeah.
It should give proper disclosure as per the accounting standards.
Yup.
Okay. So when the directors prepare these financial statements is monitored by the auditor. Auditor
Okay.
would be an external party which would be appointed by the owners. So the auditor would give a report to the shareholders stating that the financial statement that is prepared by the director, does it give a true and fair view of the actual state of affairs of the company. That
Yeah.
means what
Okay.
they are saying and what is happening is the exact replica that is given in the financial statement. So this opinion of the true and fair view is going to be given by whom?
The auditor.
In the
Auditor's report.
So if the auditor's report is qualified, that means he tells that this is not true and fair view, then the owners
Acha.
would believe.
Okay, I understood this question.
So the question is, explain the importance of true and fair view opinion in the auditor's report. So the auditor's opinion about the true and fair view of the financial statement, it is important for various reasons. First reason is auditor's report gives an assurance to the stakeholders.
Yeah.
Gives an assurance to whom?
The
The
stakeholders.
creditors, bodies, that the financial statements represent the exact position and performance of the company.
Yeah.
They
To
would,
ensure that like there are no errors, that they don't need to worry. Karke.
yeah, because see, if I give you my money, I need to have a proof that what you're telling, where you use the money is used.
Yeah. Like a
Only.
bill. Huh.
So auditor would examine and would say, yes, this person is telling the truth, or yes, this person is telling lies. So his opinion on the true and fair view is very important.
Okay.
So it provides what?
Assurance to stakeholders.
About that
Where
the
the money is,
financial
yeah,
statements
is
accurately
accurate.
represent financial position and performance of the company.
Yeah.
Can you please repeat this for me?
So it is important to have
Auditor's opinion gives
auditor's opinion gives assurance to stakeholders as it can, like, as it tells them that the financial statements are accurate.
accurately represent the financial position and performance of the company. Again,
Auditors report is
report.
Auditor's report is important as it provides assurance to stakeholders that the financial statements accurately represent the financial position and performance of the company.
Repeat.
Auditor's report is important as it provides assurance to stakeholders that the financial statements accurately represent the financial position and performance of the company.
Second, if the auditor has given a true and fair view, so true and fair opinion by the auditor enables the stakeholders to make decisions related to further investments, reducing the risk of representation, etc.
Yeah.
So, auditors' true and fair view opinion helps the stakeholders to make informed decisions. Can you repeat
Okay.
this? Audit.
Auditor's report helps the stakeholders make informed decisions
This will not
as
come for more than 4 marks.
okay. As a true and fair opinion enables stakeholders to make informed decisions based on reliable financial indicators.
Term indirect manufacturing cost, what is it?
Oh, indirect manufacturing costs are basically like the cost that cannot be directly traced to the manufacturing.
For 2 marks, if you have to write,
Example, utility expenses.
factory overheads,
Huh.
depreciation on factory assets. Okay? Okay.
Hmm.
Then there is a question where there is an advice question, 7 marker.
Oh, I've done this one. Is this some berry one? I've done this in my paper.
Advise whether you should apply the rate of factory profit or no. Justify your answer.
Rate of 50%.
Hmm.
Yeah, so 50, it would be, so advantages I'll
Over
say first.
here, Barry was applying a factory profit of 50% before also.
Oh, acha, okay.
And now they want to advise Barry whether he should continue applying this 50% or no.
They should advantages consistency concept
Okay. Why? So it
because
will
you should
simplify
stay
planning and
consistent.
reporting. Okay. You should say,
Yeah,
you put
and
the
it could,
concept and you explain 2 marks. Okay.
yeah. Second would be that it would make accounting simplified and be less time consuming.
Okay. 3
Yeah,
marks.
and now disadvantages. Disadvantages would be that it would not change like the impact on profit. It would be still be same.
Which profit?
The factory profit, gross profit.
Hmm.
Gross, yeah, correct only, na, means gross profit won't change if the percentage changes. It won't affect so much.
Okay.
Yeah. Okay. Then
If I apply a fixed rate of factory profit, what
uh,
is factory profit? Factory profit is the difference between the cost to manufacture and cost of buying.
yeah.
So if I apply a fixed rate, the
Hmm.
connection to market price is removed.
Yeah.
If the connection to market price is removed, it makes the rate more subjective and less reflective to the actual market condition.
Hmm.
See, factory profit is a difference between cost to manufacture and cost to buy.
Correct.
So whatever is my manufacturing cost that I compare with the cost of buying outside, and the
Hmm.
difference between it would be factory profit.
Yeah.
Now if
Okay.
I apply a fixed rate, this connection is removed.
Hmm.
So it will become very subjective and not reflective.
Hmm.
Suppose in the market the price has reduced significantly.
Yeah.
Then what? The connection is gone. So applying
Yeah.
fixed rate of factory profit although ensures consistency, but the real purpose is lost.
Okay, got it.
And also if you apply a fixed rate of factory profit, your factory staff would want more bonuses.
Oh yeah.
Okay?
Yeah.
Potentially distorting the performance incentive.
Hmm.
Recommendation.
Should not.
So he should consider the trade-off between consistency and market relevance.
Yeah.
Okay. A flexible rate tied to the market condition may be a balanced approach
Hmm.
because factory profit purpose is only to ensure the difference between the cost of manufacturing and cost of buying while maintaining simplified accounting practice.
Yeah.
Okay, so we've done
Yes,
like how
stop.
many questions? 7 questions, and I want you to answer these 7 questions when we meet next.
Okay.
And now what will you do?
Ratio.